Good morning, everyone. I thought I would share today a little bit of a perspective as to why a rising oil price impacts the dollar and also how that can impact asset prices, in particular assets like Bitcoin. Now, over the last week, gold's fallen by more than 10%, as well as stocks falling by 2 to 3%, Bitcoin's fallen by 2 to 3% over the last 24 hours. And we've just got this continued escalation scenario in Iran and the Middle East more broadly. Now, over the last couple of days, state-owned Qatar Energy noted that 17% of its export capacity for liquefied natural gas has been knocked offline for the next 3 to 5 years. Now, the reason things like this actually matter from an investment perspective is that as oil and gas prices increase, it of course impacts every sector of the economy, from transportation, manufacturing, data centers, and even groceries, because those groceries have to get delivered. Now, as energy prices rise, you generally get a trend of people pulling money out of financial assets, so that's gold, stocks, Bitcoin, and that money then gets used to pay for living and operating costs if you're a business. As a byproduct, of course, prices rise, which is inflation, and central banks and governments have got a couple of tools that they use to try and bring inflation down. So governments can, of course, cut spending, which is called austerity, and central banks can increase interest rates to reduce borrowing, or they can reduce bond purchases, which is called quantitative tightening. Now, when interest rates rise, the knock-on impact is if you're a highly indebted country or economy, it can actually make the economic situation worse, not better, because national debt repayments increase. Consumers with mortgages, as well as businesses with interest rate sensitive debt, will cut back on spending, which in turn can impact employment as well as businesses in a vicious cycle. So why does this matter? Well, when oil prices rise, the dollar typically follows. So when I say the dollar, I mean the strength of the US dollar compared to another currency. It's actually benchmarked against 7 or 8 other major currencies. And in this green box here, the black line represents the oil price in the Middle East, and the red line represents the strength of the US dollar against a basket of other currencies. Now, as you can see, there's a pretty strong correlation since about 2018, where when oil prices go up, the dollar typically follows. Prior to 2018, there was a very strong inverse correlation, and that was because the US was the world's largest energy importer prior to 2018. And then the shale revolution hit, which was the invention of horizontal drilling as well as new fracking techniques that allowed the US to extract more oil and gas from their own country. And that changed them from being the largest importer to one of the largest exporters in the world. So long story short, the more that they export, the more demand for the US dollar, the stronger it gets. Now, why do we care from an investment perspective? Well, as the dollar gets stronger, generally speaking, financial assets can get weaker. And so you can see there's a pretty strong inverse correlation here between the dollar strength in black and Bitcoin's price in orange. Now, that isn't always the case. It's not a perfect correlation, but it is a broadly aligned inverse correlation that we are keeping our eyes on. So again, a stronger dollar, higher energy prices can be bad for financial assets. So this is just something that we're keeping an eye on. And if you want to keep your finger on the pulse, then you can go to blockbyte.com.au and subscribe to our newsletter.